are now entering the holiday shopping season, and Americans have been spending more and more on holiday gifts every year since 2008. We have Black Friday, Cyber Monday, and let's not forget last minute sales just before Christmas. According to the Gallup study, American adults were expected to spend approximately $920 on gifts, which is up from last year, where they spent around $885 on gifts. Holiday sales were expected to increase by 4.3 to 4.8% over 2017, which is over $700 billion according to the National Retail Federation. With advertisements for big sales everywhere, there is a great chance for impulse buys and overspending. So the stock market may be at all-time highs, but interest rates on high-yielding savings accounts are dropping every time the Fed cuts rates. So your return on your money is little to nothing. So do you think that it's time for you to start investing, or are you okay with just being a consumer? Do you think that you should invest your money and put it to work, or are you okay with just spending your money and not building a nest egg in order to reach financial independence? I want to share with you guys a segment from a video by Casey Burns, and he's going to tell you guys a little bit more why it's important that you start investing.
Another thing we should consider when we're asking ourselves, is now the best time to buy stocks, is history. So let's talk a little bit about history, and we'll talk a little bit about the mindset of the wealthy, and then we'll go ahead and wrap this video up. The historic average price to earnings ratio of the S&P 500 is about 14, with a trailing PE of 16. The current forward PE is 17, and the trailing PE is 22.82. As we can see, that's a little bit high, and that could be a little bit of a cause for concern as far as, are we going to experience a pullback soon? But the question is, does that really matter? For that, we look to history again. If you bought the past 37 market pullbacks, or in other words, a decrease in stock prices by more than 10%, you made money every single time. As long as you didn't sell at the bottom, you made money. Buying that valley of those pullbacks is the best investments you could make. When things look bad, good investors rush in and buy cheap stocks, which gets us into our next topic of discussion, the mindset of the wealthy. Think about a recession. A recession, people are losing their jobs, assets are losing their values because people need the money, they need the cash more than they need the asset. So what do? They sell it for a reduced price. And guess who's buying those assets at those reduced prices? Rich people. As the economy trends back up and, people get their jobs back from the rich person who bought the asset and fired them, the person's just sitting over there holding on to their asset, and then once things get overvalued again, they say, all right, well, once they're above water on it, once you sell your assets at those reduced prices to those rich people who had the money laying around, and they also fired you and made you sell your assets to them at those reduced prices, I'm not trying to make a political statement here or anything, but yeah, then those assets go back up in value. Those impatient or unprepared people just got put on the other side of the wealth gap, which is crazy, right? Every time a recession happens, the wealth gap widens between those who are prepared and those who were unprepared. I just want to close out with a couple statistics here. 84% of all stocks owned by Americans belong to the wealthiest 10% of households. This includes everyone's stakes in pension plans, 401ks, individual retirement accounts, trust funds, mutual funds, and college saving plans alike. So what does that tell you? That tells you that wealthy families, they buy stocks. So is now a good time to buy stocks? Is now a good time to be a wealthy family? I don't know. Let me know in the comment section below.